Hello all, good evening. So welcome to another market analysis video. So today, again, there were some interesting concepts which are playing out in the market. So that's why I thought of making another learning video. So as you can see, this was today's market. Market did a gap down opening, and it opened somewhere here, and it rallied sharply towards the upside and closed somewhere near the previous day's closing point, right? So why I have mentioned that market repeats itself is because this behavior of the market is almost similar to yesterday, right? As you can see here, yesterday also the market had gap down and it rallied towards the upside, right? Today also it gapped down and it rallied towards the upside. So this is a repeatable pattern which take place in the market, especially when gap downs happen. And gap down should happen in a region where the bulls are in control. Like for example, yesterday we discussed that price gap down at a point where bulls were in control, right? So this was the point where bulls were in control and they did not allow the price to go below this zone, right? Similarly, today, as you can see, if this is the gap down area, we just have to look left and find out what is that particular area or point of interest, right? You can easily find here that this zone, this particular zone is a gap up zone, right? The market had opened with a good gap up and it had rallied on the upside by breaking the previous swing high. So this obviously becomes a point of support for the market, and today market did not violate this zone. And in fact, it is at somewhere here that price stopped going down and started to show some bullish behavior by showing rejections from this particular gap up zone. You can confirm that yes, the buyers are present, and once the price easily crosses this particular zone, right, it means the buyers have further accumulated and the price is heading higher, right? So this is uh, a simple price action which a market repeats quite often. And the trade which I would like to explain is something like this, right? So at 9:27 itself in the morning, I bought a call option that is 47,300 in a call option. Since it is expiry, we get premiums at a pretty good price, and I exited almost an hour later because price consolidated in that zone before taking off. And at 10:22, I exited it at 225. So 120 to 225 was the trade. And if you look at the price stopping point for the first takeoff, for example, as I marked this zone to be the support in the beginning, that is this particular gap, right? So once this gap was held, market went for the upward direction. In fact, you can see here that today was a gap down. Price eventually had a couple of objectives on the upside, but that is to fill this gap. And you can see this is yesterday's zone which we had marked at yesterday's buy zone, right? Yesterday price you know took a support here after taking up, right? I think in yesterday's video we discussed about this particular zone. So this became an initial point of halt for the price. It's obvious that once the zone was broken today with a gap down, price took some resistance at this particular point again before going higher, right? Before even breaking this zone. So that's how that was the first point of booking yeah, somewhere around 10:20 this particular point of time. I exited the first call option. And then based on further price behavior, right, we can easily conclude that the price again started to consolidate at this particular range. You can see that price took support multiple times here. And now it is very clear that it was heading to break this resistance. But as discussed yesterday, we had a couple of bearish engulfing points here. This I had discussed in yesterday's video also that this was the bearish engulfing zone for the market. Yeah, this is the supply zone. As you can see here, that these two are the I'm referring to this and this, right? These two are the bearish engulfing zones which the market created itself. And if you just extend it to the top of the wick, you can find that price eventually was not able to cross this particular zone. And once it took a breakout of this, it just went sideways towards the end, right? So this is how, again, the same thing within a selling zone and a buying zone, price eventually consolidated and closed somewhere there. So yeah, the second trade was also very simple in the context that at around 11:44, I entered the same strike at 209 and exited at 293 at 12:12. So somewhere around 11:40, somewhere here, right? Because as you can see that price started to consolidate here. It started to take support, and it showed very bullish price actions. And by confirming the support couple of times, this became a good entry point for this breakout trade. And also, since it is a gap down and price has already showed the presence of buyers by bouncing fiercely from the demand zone, it is heading back towards the previous sell points, which was this yesterday's immediate sell point. I thought price would eventually take it out, but anyway, this candle was very bearish here, and that's why price was not able to cross this particular zone. It also took rejection here and eventually stayed in this zone. So this is how, again, the market keeps repeating itself through a gap down and then a sharp rally, and again a gap down in a sharp rally. But the condition to note is that gap down should happen in a prior bullish zone. This was a bull zone yesterday, and this was also a bull zone today, creating a similar condition for the price to rally. It doesn't matter whether the US market is rallied 1%, 2%, or it's down. Where the price opens, that's a very crucial information. If it opens in a bull zone, definitely you can see some kind of buying happening. Now assume that the price wouldn't have bounced from here, right? So it would have eventually done some bearish price action here, and it would have broken the support. So then you could have turned bearish. So that's how you dynamically react to the price which is unfolding. So anyway, that's it for today's video. Hope it was helpful. Thank you.